Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, November 2nd, 2016. Well, folks, quickly I'm going to spend a little time on the S&P here. This is the SPY intraday. You can see we are lower today, but off the lows. The markets were trailing down, and a lot of the selling yesterday and today was a result of worries into the election, right? So today we were trailing lower. In fact, we were dipping right here, and then the FOMC policy statement from the Federal Reserve came out, and it didn't really do much, but it didn't reinforce more rate hikes than just December. I guess that's the best way to put it. So it's not like they said, oh, we're going to raise in December, January, February, etc. They just kept it very short, very simple, didn't scare the markets, and therefore we saw a little bit of a snapback and just going sideways here. Now, you're actually making a small bullish pattern with about 15, 20 minutes remaining in the trading day. I don't know if we'll pop up, but I think ultimately the election in less than a week now is going to be a headwind to this market, but it doesn't mean you can't have a small update. I think net you're going to head lower. But again, if Facebook, for instance, has good earnings after the bell, it's very likely we could see the market, especially the tech sector, bounce because we have been under a lot of pressure. If you take a look at the QQQ here, take a look at this, guys. If I zoom out on the Qs, I mean, look at the fall we've had. I mean, this is a pretty direct, straight down fall from about almost 120 back to 115. In fact, we were in the 114s on the QQQ NASDAQ 100 before the latest little bounce in the market. So just be aware of that. I think that's important. Markets got through one hump today, which was the Fed statement. But now we still have the jobs number on Friday. We still have, obviously, the election next Tuesday. And these headwinds should remain. Now, let's quickly look at Facebook here really quick because I want to take a look at the chart. I'm personally a little on the bearish side of Facebook, although, again, listen, there's nothing guaranteed when you come into earnings, right? So you can see Facebook trying to break below the 50 MA here. That's a little bit of a bearish sign. In addition, if you go to a larger time frame, and this is the daily chart, but let's go to, like, the weekly. All right, look at the incline on Facebook from really going back to 2014. I mean, it has not really had a major correction the whole way up. So whether it's this earnings or next earnings, I do think there will be a period where, investors and funds that have been long for such a long time, been so bullish on the stock, there has to be something that shakes the weak hands out. I don't think the fall will be a huge fall, not like a 50% haircut, but I do think that, it wouldn't shock me to see a retrace to $110 to $100 per share. Now, whether or not that happens today, that's a tough one. Again, obviously the stock's overbought. I think advertisers are beginning to realize that Facebook ad spend isn't benefiting as much. We heard from Procter & Gamble a month or so ago saying just that, and they're the biggest online advertiser in the world. They said basically targeted ad spend on Facebook isn't paying them off, so they were going to pare it back quite a bit. So, I mean, like these little things to me, whether or not it's reflected in this earnings, should be reflected in the next few earnings. You'll start to see a slowing growth of ad spend, and I think that'll hurt the stock because, again, they still might make more money, but it's all about is their rate of growth slowing. And that's what investors care about, right? I mean, that really is what it comes down to. Speaking of earnings, Alibaba reported this morning here. Take a look, stock down about $2.50. Now, the stock, interestingly enough, traded higher this morning. Let's go to the daily chart here. Gapped up and then just rolled over. I have a target on this stock. See this gap fill right here? Now, this is way lower. But I actually think it's going to go here probably in the next couple of weeks, and then we can buy it. But just one thing I was noting, see this low pivot here? Take the trend line there, and what I want you to do is put it right to this low here. See that? And look at how that level is perfect. They join forces right there. And look at the 200 moving average lurking right below. So you see how there's three support lines right around the 87 to 86 level? You guys see that? So really right in here, three areas of major support. So I wouldn't mess with Alibaba buying it until it gets down here. But once it gets down here, I mean, this is like a monster level. This is the level you dream about, to be honest. All right, so again, and I hope you guys understand this. This is what we do at InTheMoneyStocks.com. We just study charts 24/7. 24/7. We're just looking for trend lines that meet key supports, 200 moving average, Fibonacci retraces. And what we've noticed, and this is part of the PPT methodology, is that when you have enough levels combined, you get a major support for a highly likely bounce level. Okay? So just be aware of that, guys. I think that's super, super important. And again, that's, I think, what I'll leave you with today. So let's watch Facebook earnings. Fed's over. Jobs number coming up Friday. Then we have, obviously, the election. Let's see if this market can make it through. I do think the market wants Hillary Clinton to win. I think if she does win, you'll see a relief rally on Wednesday. And then I think it'll last for a few days, and then the market will putter out because it'll start looking at Fed interest rate hikes. But anyways, keep an eye on that. Let's see what we got going on. Take care. Come join us at InTheMoneyStocks.com. Take the 7-day free trial to the Research Center. I'll see you there with some great trades. Take care.